All right. Hello, everyone. On behalf of Apparel Export Promotion Council, I, Saurabh Kumar, welcome you all to this webinar on international trade financing at your doorstep. Friends, we all know that financing is a basic need for this business. In this context, we are collaborating with Vienna Trade Exchange to provide information on how factoring works in international trade and what are the benefits of it to the MSME exporters. The webinar will also focus on how and in which scenario the factoring is the best choice for exporter over the bank lines. The webinar will cover credit insurance, invoice factoring, VTX platform issue. Vienna Trade Exchange is a subsidiary of Vienna Group, a revolutionizing global trade finance organization by offering seamless, collateral-free and non-recourse solution to the exporters. Backed by deep domain expertise and strong institutional investor, Vienna has built India's most robust digital B2B credit infrastructure. With platforms spanning supply chain finance, GST services, and payment aggregation, it is empowering MSME exporters and banks alike. VTX set up under the IFSC's sandbox at Gift Cities, enabling efficient post-shipment export financing on a global scale. And we are fortunate to have Shri Manish Gadia, who is CEO of Vienna Trade Exchange. So now I hand over to Shri Manish Gadia. Over to you, sir.
Thank you, Saurabh-ji. Just a check. Am I audible, loud and clear? Yeah, if
Yes.
somebody...
Yes.
Perfect. Thank you so much. So I would be in about a couple of minutes sharing the deck as well. And if someone can confirm if my deck is visible. But first of all, thank you so much to the entire AEPC team for letting us organize this webinar on factoring. Hopefully by end of this webinar, which is about an hour, everyone should know the basics to intermediate level of what factoring is all about, and hoping to answer all your questions that you'll be putting up on the chat window. As somebody mentioned in the chat window, so during the presentation, I'll not be able to see the questions. At regular intervals, I would take a break and I would come back to the questions and I would answer that. My deck should get over in about half an hour. At half an hour, we can have another 10-15 minutes or open forum where you can unmute and you can ask the questions. I think Saurabh-ji, is that okay? We can do that as well, and a Q&A session in the end.
Yes, first 30
Perfect.
minutes to you, and then we can have a question answer session
Yeah.
at the end.
Yeah, by all means, no questions are basic or no questions are tough. Please feel free to ask all your questions on the chat window. Would love to answer that. Let me just introduce myself a bit more. So I'm the CEO of Vienna Trade Exchange, which is a regulated exchange based out of Gift City. I've been a historic banker. I have over 20 years of experience, a majority of them in supply chain finance. I was part of the initial HSBC team back in 2006 to have started this product in HSBC. That was amongst a few banks to have done supply chain finance that time. In 2014, when DBS started this, I was amongst the founding team of this particular product there, where we rolled out many more variants of supply chain finance and factoring. We worked with RBI on Factoring Regulation Act, also during the launch of the TREDS domestic receivable discounting system as well. So I've got quite extensive experience in this field, and hopefully I should be able to answer all your questions. So I would be sharing my screen now, and if somebody can unmute and just tell me if my screen is visible, that would be awesome. Is my screen visible?
No. No.
Okay, just give me a second again. Apologies. What about now?
Yes.
Perfect. Thank you so much. So as Saurabh-ji mentioned, these are the areas which I plan to cover. Let me quickly jump onto the presentation. I think we've got an audience from Apparel Export Promotion Council. Textiles has always been the core segment back in 2006, which we started targeting from this product perspective, because textiles and garments, the dynamics of industry are such that this product fits well. In fact, I remember both at HSBC way back in 2006 and DBS 2014, my first two clients were Delhi based clients, and both of them were apparel exporters. So just wanted to share that anecdote. But if for the uninitiated, what is Gift City? It's a location an hour from Ahmedabad, which is carved out as an offshore jurisdiction of India. If you go to UAE in Dubai, there are zones such as Abu Dhabi Global Markets, DIFC, Dubai International Finance Center. Laws of the land of UAE do not apply there. These areas have their own laws. Why it is created as such? Because these countries want to promote a part of their country as an offshore jurisdiction so that they can become global business hubs. When you talk about mainland India, the laws have to be slightly more tougher so that AML, a bit of more control can exercise. But if you want to become a global hub, you need to relax some of the nuances, which is why Singapore, Hong Kong, Dubai have become global hubs. And with that vision, Gift City, which is an hour away from Ahmedabad, was set up. So it has its own special economic zone. It has its own global financial hub. I visit Gift City practically every month. I'm sure a lot of people from here would have visited Gift City. But if there is one location when I visit which reminds me of Dubai, it is Gift City. You will not believe the kind of infrastructure which this particular city has created. So my request would be, next time if the members of this association happen to visit to Ahmedabad, please take a round of Gift City. So a bit more about Gift City. Gift City will not be governed by Reserve Bank of India. It has its own regulator. So RBI, SEBI, IDAI, PFRDA put together has created something called as IFSCA. The rules and the circulars which IFSCA releases gets applied on Gift City. Okay, so for example, how do we do factoring in Gift City? We follow the norms which are there on IFSCA. You would argue that yes, as RBI, SEBI, IDAI, PFRDA, all are pretty much the same mainland authorities, but be cognizant of the fact that these guys want to promote Gift City as the global hub. So more and more transactions which used to happen, in Singapore, in Dubai, has started coming to India now thanks to Gift City. For example, a little bit deroute, aviation leasing, okay, of helicopters, of corporate jets, ship leasing. It would never happen in a country like India. Have started happening because of Gift City. Bombay Stock Exchange, National Stock Exchange have also a Gift City subsidiary, and they have the exchange running there as well. It's called as India INX. So just wanted to give you some bit of idea about what Gift City is all about. About couple of years, 3 years back actually, Gift City was mandated that how can they become a global hub from facilitating cross-border trade finance, starting with India, and later on facilitating cross-border trade finance for every other corridors. So they looked at the model of TREDS, which is very successful in domestic in India. So for people who are not aware, TRED stand for Trade Receivable Electronic Discounting System, wherein any company which is having 250 crores and above have to mandatorily get listed on that particular exchange. And if they have payables to MSMEs, they need to get it mandatorily discounted on that exchange. So currently there are about 5 TREDs. The 3 of them, which are the old one, do about $1 billion of volume on a monthly basis. But only domestic invoices are permitted on that, which is where Gift City said, why not we promote the cross-border trade, especially help the exporters from India. And that is where they came up with which is something called as International Trade Finance Services, ITFS platforms. Under ITFS platforms, similar to TREDS, 4 licenses were issued for exchanges so that they can list export and import invoices. Start with, all these 4 exchanges are doing India linked businesses. So that is what ITFS is all about. Vienna Trade Exchange, you see the logo on the extreme top right, is the one of the first exchanges to have got license, and currently we are the largest out of GIFT City. So yeah, so let's move on to the next. I hope I've given a little bit flavor of GIFT City and what ITFS is all about. Now, a majority of the over 50-60 participants we have online would be aware about factoring, but a lot of them would be perhaps hearing factoring for the first time. So in the interest of those people, let me explain very casually what factoring is all about. So you would all hear about invoice discounting, export invoice discounting. Factoring is different from export invoice discounting. Okay, what are the differences? In invoice discounting, a bank or a financier discounts your invoices. So for example, they finance those invoices. It's a debt product, a DEBT, debt product, not the debt product, but in factoring, the financier buys those invoices. So the invoices get assigned to that factoring. There are various structures which are possible in factoring. Okay, so let me first give you a basic example. So let's put names to it. Let's put the client is a ABC garment company. Let's put buyer as let's say Marks and Spencer UK. Let's say factor or financer, let me put up, let's say one of the biggest factors in West would be, let's say, Wells Fargo Factoring Company. This ABC garment company will be getting money from Marks and Spencer after 90 days. But they want the money upfront so that they can do more business. They perhaps have to supply more and more. They will not get working capital. Perhaps they're out of their working capital. They need more and more working capital. What they can do is they can collect the title of good documents, give a copy to this Wells Fargo factors, maybe on day 5 or a day 6. On day 7, Wells Fargo factors would factor those invoices. 80 to 90% of that will be given upfront to ABC Garment Company. After 90 days or whatever grace days that may be involved, Marks and Spencer UK will send the money on your behalf to Wells and Fargo factors for a full and a final payment. Okay, that time they will release the rest 10 and the 20%. Now interest can be deducted upfront, interest can be deducted month end, interest can be deducted rear ended as well. So that's how factoring happens. Okay, Wells Fargo will not ask for any tangible security for doing these transactions. What they will ask for is assignment agreement, meaning that tomorrow if Marks and Spencer defaults, they can step into your shoe of a seller and they can recover the money. I will also get into some bit of nuances, how it happens. For example, Wells Fargo factors will take a credit insurance. They may take a FCI credit cover also to cover their risk. But in a way, this is what factoring is all about. If it's invoice discounting, debtor or Marks and Spencer will not come in between. It's between you and Wells Fargo factors, or let's say the financier, which may be Wells Fargo Bank. Debtor will not coming in between. Typically, invoice discounting, they will ask for a tangible security as well. And in case the money doesn't come in, Wells Fargo will come to you only, not like factoring where they will go to the Marks and Spencer to recover the money. So in a way, that is what factoring is all about. Let me take a pause here and see if there are any questions. So maybe since I will have to switch the screen, can I request somebody to speak up, or let me only go and see the questions if there would be any. Okay, at the moment, there are no questions. People have written that my voice is breaking. Can somebody confirm, is my voice not proper?
So it is very much clear. I have mentioned there, maybe it is some issue with their speaker.
Okay, perfect. So no questions so far. Let me move ahead. Okay, so I will bring in now two slightly more technical elements onto factoring. Again, I would try to make it very easy for you to understand. Let's go to the same example. Wells Fargo Factors, ABC Garment Company is the seller, and Marks and Spencer UK is the buyer. Wells Fargo Factor, for it to do unsecured factoring on ABC Garment Company, they need some sort of a risk mitigant. So what they would do is, behind they would take a insurance on Marks and Spencer. Okay, where the insurance company typically can be ECGC, can be a agency such as COFAS. COFAS is a global insurance company, can be a Spain-based company called as Atradius. Okay, these are typically the insurance companies which gives insurance on a factoring transaction. So in case Marks and Spencer doesn't pay, Wells Fargo Factor will go to Atradius, ECGC or COFAS and tell them Marks and Spencer has defaulted, please pay me. That's how they get the confidence in doing these transactions. Okay, so that is what insurance is all about. Insurance covers everything except commercial disputes or the performance risk. If ABC Garment Company, instead of supplying a red t-shirt stock, supplies a blue t-shirt stock, who's at fault? It's ABC Garment Company, not Marks and Spencer. In that case, insurance company doesn't pay. In that case, ABC Garment Company has to pay back the money which they had received. If there's a commercial dispute saying that in the transit or after usage of 1 week itself, all the t-shirts have started developing holes, there's a quality problem, then it's a clawback on the ABC Garment Company. Then also insurance company will not pay. So I hope you are clear with trade insurance company. So if Marks and Spencer Company UK, there's a political problem there. If Marks and Spencer is purposely delaying, if Marks and Spencer has gone bankrupt, then the insurance company will pay back. Here I will give you one more term, factor chain international. Okay, sometimes what happens is this Wells Fargo Factor company may not take insurance. There's an alternate mechanism in which they can cover Marks and Spencer. There are more than 100 factors or financiers which are into factoring, including banks, reputed, have come together and formed a chain of network called as Factor Chain International. For people who want to research on it, you can go to fci.nl. I will be showing that particular slide. So for people who want to take a snapshot, they can, but let me stick to this example. Wells Fargo can access that website, can reach out to the financiers in UK because Marks and Spencer is in UK. So Wells Fargo may say, Deutsche Bank Factors, or let's say HSBC Factors, I want to cover Marks and Spencer. Can you give me a guarantee that you will cover? In that case, HSBC gives Wells Fargo Factors saying that, okay, go ahead, do the factoring. In case Marks and Spencer UK fails, HSBC will cover that. So that's called as an FCI credit cover. Okay, so Wells Fargo can do factoring taking insurance. There's Indian insurance company also, ECGC. There's global insurance companies. Typically people value global insurance companies more than Indian insurance companies. Wells Fargo also, if it's a member of FCI, can take a cover and can do this transaction. So this is what trade credit insurance and Factor Chain International is all about. Slightly, I don't want to burden everyone with slightly more technical terms, but just as a basic, FCI has been working for 20 to 30 years beautifully well. I know in 2006, I used to do on a weekly basis 10 to 20 transactions using this Factor Chain International. There has been currently no problem. This system works well as well. And by virtue of we being in gift, the financiers can avail FCI cover there as well. There's a proper rules these guys are guided by. Don't assume that tomorrow that HSBC will not pay to Wells Fargo. No, nothing like that happens. It's been honorably running for decades and decades. So very well trustworthy to do business where an FCI cover comes in. Let me give you at this point what kind of companies from our AEPC members we can do. Okay, some basic nuances. Excuse me. So typically factoring is only you can do when there are no LCs, when you do business on open account terms. So if dealing with between ABC Garment Company and Marks and Spencer happening on open account basis, that is when you can do factoring. If there are LCs involved, you can't. Ideally, the financiers are okay with up till 120 days. There are financiers who do financing for 180 days as well. But in my last 20 years of experience, 95 to 99% of the transaction falls in and around 90 to 100 days. Incoterms, typically FOB, CIF, all are okay. Financiers are not okay with Incoterms when the supplies are on DDP, DAP. Basics of your seller should be proper. You should be a profitable company. Your net worth should be positive. Uh, your track record between ABC Garment Company and Marks and Spencer should be good. So it's written 6 shipments, even 3 shipments, you should have done it and the money should have come on time. Okay, on a case to case basis, even if you have done 3 shipments and if your money has come on time, the 4th shipment you can avail factoring, 4th onwards, not 4th onwards, all the shipments. So, on an average, if you have about 6 months to a year history with Marks and Spencer, you are perfect for a factoring transaction. If there are bigger companies, hypothetically assume, let's say, companies such as TJX, companies such as Urban Outfitters, companies who've got Carrefour, who's got big track record and beautiful way of payments. Even if you do a second shipment, perhaps, there are financiers who are willing to cover the risk, and they, from the second or the first shipment itself, you can do that. These are the preferred countries. If you supply to, you will easily get insurance. Europe, Australia, China, Canada and USA. GCC, which is Middle East, is preferred, but I have seen that there's a delay in you getting the insurance in Middle East, but you do get it. So yeah, so these are these, so we don't see too much, but these are basics that you need to understand. One more thing which is not recorded here is you need to send a letter to your debtor saying that I am availing factoring, going ahead. The payment will not be done to me, but the payment should happen to the financier. That is very important. It's called as notice of assignment. If you remember, during the explanation, I had said the payment from Marks and Spencer should come to Wells Fargo. So there's a letter which ABC has to send to the debtor. It's called as notice of assignment. Okay, so these are some of the eligibility terms. Now you would say, so let me skip this slide. Let me address this first and then come to this slide. So you would say, I get approached by a factoring company almost on a weekly basis. So you guys are members of Apparel Export Promotion Council. It's one of the most important associations. And as I said, textiles and garments are perfect industry for this. Almost all of you would have been approached by factoring companies on a weekly basis, on a monthly basis. Some of you may be doing factoring as we speak as well. Why should you come to someone like a Vienna Trade Exchange? One important thing, let me start saying the benefits one by one. If you do a documentation with us, it's one time. Okay, we have a pool of financiers behind us who bid for your invoices. So unlike you negotiate one by one with each and every factor, boss, what's your rate of interest? 10, 11, 12, what's your credit insurance percentage? You just have to upload or give your need on our platform. Financiers across the world, not just in India, will come and bid for your whole turnover or invoice to invoice, saying that ABC Garment Company and Marks and Spencer, I'm willing to give you discounting at 11%. Another financier may bid at 10.5% with insurance. So we will handle that entire democratizing of your bidding on our platform. One, time and again, you would see switching yourself from one factor to another. Doing documentation with Vienna Trade Exchange, which is a regulated entity, I'm bound by the regulations, in a way is doing indirectly documentation with all these financiers. You don't have to do multiple round of financing. If you've given me KYC, KYB, I can share that with the financiers as well. Okay. Number three, if there are disruptions, you would have seen factoring companies typically, you will come across news such as Greensill 2 years back falling, Sten Financial, which used to be very big in apparel, falling last year. We will safeguard you against that. Overnight, if you have to switch to different agency, a different factoring company, we can help you do that. There are a lot of debtors that you may be dealing with. It's Marks and Spencer, it may be Carrefour, it may be some ABC Germany, it can be CDE UAE. Sometimes factors pick and choose. I will do one, another will do two, another will third one will do three. We can manage that through our platform itself. Number four, typically if you upload on our platform, we will share your entire set of documents directly with the financiers. So you need not go to each and every platform and upload the invoices as well. These are some of the more benefits. You would see government talking about a Bharat Trade Net project. Okay, we get invited into discussions by Ministry of Commerce, Ministry of Finance for those discussions as well. We are working out, can there be more incentives for exporters be given who come on such platforms. But at the moment, the benefits which I talked about are good enough. Last, I forgot about this, is we are trying to get new and new finances across the world. Give cities an offshore jurisdiction out of India. Okay, people need not register an entity in gift city to do business. So when I travel regularly abroad, I tell them the India story, and I tell them, why don't you come on my platform and finance some of the exporters. Okay, there's a class called as private credit which is rising across the West. Private credit guys are non-bank guys which finance. This is not non-NBFC. These are private funds which finance trade assets. So we are trying to get variety of financiers on our platform. So tomorrow, if segments of all kind, from micro enterprise to even a large corporate, would have enough on my platform, to be discounted for. So these are some of the advantages of Vienna Trade Exchange. I've already covered this. Little bit of about Vienna, and the last slide, then we can pause for a set of questions and we can make it open forum. So little bit about Vienna Group. Sanjay ji mentioned, it's not a startup. We've been there for over a decade now in India. We operate as a brand name Vienna. More than 10 banks use our technology. Apart from Vienna Trade Exchange, on a monthly basis, I do 1.5 billion per month of trade finance facilitation. I have a GSP license as well. Most India's 25% of GSP along with e-invoicing passes through my counters. Indirectly, I cater to around 300,000 SMEs. My footprint is around 600 cities in 600 cities in India and around 23 countries. Very lately, apart from Vienna Trade Exchange, I've got an NBFC license as well, which I would say as a number two license apart from the banking license, which is tough to get. The second most tough license is an NBFC license. I have got that as well. Okay, we've got Rubix, which is a data platform company, something like a Dun and Bradstreet. So we've got a bouquet of products. I want you to notice at our investors as well. IFC, which is a World Bank company, has invested in us. SMBC, amongst the largest banks of Japan, has invested in us. So we come with a certain degree of pedigree, unlike other startups which you may be referring to. So I've already covered this. If you can take a snapshot of this, you can ask me questions right now. In case at any point of time you want more details, you can reach out to my colleague Mandar. This is his mobile number, this is the website address, and this is the email address. You can reach out to him and you can ask all his questions. So right on the time, I think 3:30 I've covered. Let me stop the sharing and open it for the forum for any of the questions. So let me go to each and every question one by one. Yeah, there are quite a bit of questions which have come in. Apologies for people who are saying it's a bit of echo. Please reach out to Mandar. We are happy to take a one-on-one session with you as well. There's a question for Mr. Vijay. Sri Lanka, Bangladesh can use factoring. Totally depends upon the financier. Yes, we do have financiers who will cover countries like Bangladesh. It totally depends upon the credit insurance or FCI cover. If your debtor, whom you are exporting to, we get insurance, the financier will cover it. They are not negative countries. Some of the countries such as Sudan, Iran, Iraq, Russia, those are the countries where you can't avail factoring at the moment. But Sri Lanka, Bangladesh, certainly reach out to Mandar and we can get it checked. Dr. Singh is wanting a PPT. Nena has been instrumental in conducting this webinar. I'll request Nena to share the deck with the AEPC team, and AEPC can circulate the deck to all its members.
Yeah,
Is
we will share, sir. Don't worry, we will share the presentation, whatever we get from Vayana, and we will share to everyone who has registered and who have joined. We'll share with them. And who, if anyone wants to ask some question, you just raise your hand. I will allow you to.
right?
I'll unmute you and I'll allow to ask the question.
Yeah, Jayji, just couple of more questions are there. Let me just address those. They are on the text
Sure,
window. Then we can
sure,
go on the question round with respect to verbal questions. So the
sure.
Mr. Abhay has a question. Is there a fixed interest rate for financing or will it vary case to case? Can you share a summarized introduction of VTX by email along with contact address of the concerned person? So let me address the second question first. We will certainly we will prepare an email summarizing what VTX bring to the table and the single point of contact with Mr. Jay. Mr. Jay will take liberty in circulating even that email to everyone. Now the question fixed interest rate, it totally depends upon case to case basis. I can give you a band. Approximately 10 to 12% is in and around will be the rate of interest which will be offered per annum basis to everyone. It can be 10, it can be 12 as well. Just a second, guys. Sorry, apologies for that interjection. I was getting multiple calls. I had to disconnect my phone because the guy was just keep on calling me. Apologies for that. So let me address that question again. So 10 to 12% is a band. Once you have availed, typically these rates are linked to SOFR. Okay, so SOFR 90 days currently is at around 4.5%. Usually they will not move unless there's a global disruption and SOFR moves very heavily. Okay, so you can be rest assured once the bidding happens, more importantly for that entire year, you can be rest assured that it's a fixed interest rates. But yes, if there's wide interest movement in SOFR, rate will tend to move, but it will be fully transparent. Miss Anuradha Das, again, we may get the slides. Are you financing for buyer from Russia? I've answered that at the moment, Russia is not where factoring is allowed, but maybe we can check that again if financiers have started financing Russia-based transactions. Mr. Umang Poddar have a question. We have spoken to several customers who require open credit regarding use of trade financing. However, we have two major issues. Most customers are not willing to use this model. So how can we convince them? So, very pertinent questions that if you are exporting, see, so you are an exporter, okay, you will be dictating the terms, right? Only when you import, okay, it's the exporter will dictate the terms. Factoring is usually for the export side. So by all means, if you have confidence on the debtor that yes, after few transactions I can put him off LC, which is documentary credit and heavy cost product, to factoring, by all means do that. It's not like you will not get any safety. Credit insurance and FCI cover would ensure enough safety in that element. Okay, so I hope you understood. Factoring is for export. You will dictate the terms. Okay, finance companies tell us that the PO is to be issued on their name, which both and customer are not okay with. So sorry, maybe during the Q&A session, I will request Mr. Umang Poddar to unmute and explain his question. I think that will be better. Are you financing for Israel buyer? We were financing for Israel buyer just before the war. During the war, when it started, all the financiers have paused that financing. What typically happens is during war, nobody will finance. Let this war settle. Israel, I'm sure, would be one of the countries where financing can happen. At the moment, financing with respect to Israeli buyer is on a pause. Can we get the advance in foreign currency? Yes. So let me explain this, Vijay ji. Your bills, export bills will be in US dollars. I would be factoring not in INR. I would be factoring and giving you dollars only. The dollars necessarily, as per the rules, will have to go and credited to your working capital banker account. So the ABC garment company, if its working capital banker was Stancy India, I will have to send US dollars to Stancy India to your account only. So you will get advance in foreign currency only. Thank you very much. Considering buyers in A1 and A2 countries, the ROI of 10-12% is on a higher side. Just give me a minute, sir. Yeah. So, sir, you need. So to answer that question, please understand, sir, this is unsecured financing. I'm not taking any tangible security. Please compare financing of this against any other unsecured finance. Number two, the financier has to pay his cost for credit insurance company as well. It's not like the entire thing is spread. Number three, basis case to case basis, rate of interest can be concerned, Manish ji. So Manish ji, have a chat with us, with Mandar, with Naina. Give us your financials. Let us see what best we can do. One thing we can tell you is we've got about more than 5 financiers with us and rising. By end of the year, we will be having more than 10 financiers. If somebody can give you best interest rate, it will be us. And if you're not getting from us, you will not get it from any other private credit company. And Manish ji, you can't compare us with bank rate. I cannot. If you compare unsecured rate with your bank rate, in banks you would have given tangible security. So I cannot compete with that. At the same time, why do people use us? People use us because the agility in which. So I'll give you an example. When the Trump tariffs kicked in, all of a sudden, the textile and the garment guys, what they were to ship for 6 months, they started running around the clock to ship it. At that point of time, banks did not come and double the limit. That is the time when companies started approaching us. We need immediate limits because the tariff will be doubled, the tariff will be tripled, the quotas will get over. In the time of disruption, wars happening everywhere, quotas coming across, you need a far more agile player who can turn it around, the limits in 2-3 weeks. I think that is where we can be a reliable partner. I can share one more instance, sir. 20 years back, or let's say even 10 years back, typically an SME, I'm talking about a 10 to let's say 300 crore company, even higher, they would be working with one or two banks. I go to a 50 or a 60 crore company now, they work with minimum two banks. They have a private credit factoring company, or not just one, sometimes two in their portfolio. They don't want to miss a chance. Tomorrow, if some global supply chain disruption happens, they need to have a backup. That is where we can add value. On a rate to rate basis, I can give a guarantee. I cannot compete with your bankers. Are you doing factoring for Saudi Arabian companies? On a case to case basis, if we get credit insurance, for sure. Typically in Middle East, like I said, it takes a lot of time. Sometimes we get, sometimes we don't. Give us, talk to us. We will find out whether can we get the insurance on the Saudi Arabian buyer. If yes, we'll be able to facilitate. Please advise who gets export incentive like duty drawback. it's the exporter. Factoring, you get realization upfront. That has no bearing on the duty drawback. You as a seller will get all the incentives that you are entitled to. Don't worry on that perspective. As a matter of fact, we are working with government for to come up with something where exporters can be incentivized so that they can adopt factoring. Again, when it gets released, I can share more, but at the moment we are working with the government on that. I am being a merchant exporter. Can you support pre-shipment financing? At the moment, first of all, merchant exporter means you do high seas sales. If my understanding is correct, Dr. Singh, high sea sales are looked slightly with higher lenses with respect to finance company. On a case to case basis, I can do merchant exporter. Number one. Number two, pre-shipment financing is a domain which I'm developing right now. I'm allowed to do pre-shipment financing, but I don't have financiers who do pre-shipment financing. It's a domain of banks at the moment. So unfortunately, I'll not be able to help you in pre-shipment, but only on the post-shipment at this moment. But as I said, I'm working on it. Hopefully the next time we do something with AEPC, I would have something to offer to you. Please advise. So KGI clothing, there's a question. Please advise, ECGC will cover insurance. Oh yes. So we have Exim Finserv as one of our financiers on our platform. Exim Finserv works with ECGC. There are a lot of other financiers on our platform. They rely on ECGC cover as well. So delegate from KGI clothing, talk to us. We will analyze your ECGC insurance cover and we'll see how we can help. Manish ji has given his email address, manish.mehra@rajlakshmi. Thank you so much, sir, for that. Maybe I'll request Nena or Mandar to please reach out to Manish ji so that we can have a discussion. Any other hidden cost other than ROI? Abhay ji's question. So when you go directly to private credit companies, there would be hidden cost which will be coming in. For example, sometimes they may charge you remittance cost, which will range in X number of dollars. The advantage of going with us is we ensure that the bidding happens and everything is declared upfront to you. Okay, so we know business, we know factoring since about 20 years. We are in the market, we work for sellers. So we will work with you to ensure that there are no hidden costs which gets charged with you. Having said that, you always have an option on our platform. If you are not able to like the customer service from one financier, you can always move to another financier. Dr. Singh has shared a active Exim member group. Maybe I'll request one of our team members to become a member of that as well. Thank you so much, Dr. Singh. Yeah, KGI Clothing, Mr. Uday Kumar has shared his email address. Thank you. We will reach out to you. So over to you, Mr. Jay. We can now take more questions. There are no more written questions I see in the window at the moment.
Yeah, only Mr. Manish has raised the question hand, but I think you have already answered his question. Mr. Sonu is also asking.
Yeah, Sonuji, what is the
Yeah,
question?
now, is the factoring on non-recourse basis?
So absolutely, sir. Very pertinent question. Factoring, export factoring typically happens on a non-recourse basis. I take credit insurance. I take credit insurance to safeguard you from buyer's risk of delayed payments, buyer's risk of default, buyer's risk of country political problems. So on my platform, everything typically is non-recourse. Factoring is also with recourse, where I don't take insurance, where I set up limits on you. But at the moment, everyone who avails factoring in export goes for non-recourse basis.
So now, if the exporter is already into ECGC coverage, and you would also, when you are going in for non-recourse basis, there will be a built-in cost of insurance that amounts to dual payment. So how do we risk mitigate that, or at least make it more cost effective?
Perfect, sir. Perfect, Sonu. Sir, what's your good name, sir?
I'm CA Vishal Chaudhary. Right now, I'm representing
Sonu Exim.
Private.
Vishalji, very pertinent question. Absolutely right. So So there are financiers, sir, who are comfortable with ECGC as a cover. There are financiers who are not comfortable. In case we opt for a financier who are comfortable, or sorry, not comfortable with this, we have no option. They will be going and taking our insurance for sure on that. In case there are financiers who are comfortable with ECGC, we can talk to ECGC, get that policy assigned in case we are doing all your debtors. In case we are doing only specific debtors, we will have to work with ECGC to ensure that can they carve out that particular debtors or give us some endorsement that the claim of this particular debtor can be paid to that particular financier.
Yeah, that can be customized with ECGC. I have experience on that.
Yes.
But major issue would be the cost factor. How to
So when you carve that out, the cost is saved, right? There is no additional cost.
so normally they would insist on their insurance only. It's business for them.
So
So
like I said, so Exim
eventually you end up with dual payment tax.
Sorry.
Eventually you end up with dual payment. That takes it, and it's about 2% turnover.
So okay, so your question, eventually you end up double paying and it's about 2%. So let me share some insights as to what the insurance cost. Insurance can cost anywhere around 0.15 to about 0.5 per rotation. So if your days are 90 days, you multiply by 4, and as you rightly said, the rate of interest can be peaked up with 0.60 to about 2%. So in your case, let me maybe we can take it offline and let us engage with ECDC if we can do something. Okay, that is what I can do. I can tell you in the past, I have worked transactions where ECDC has carved it out and have not charged anything in addition. Okay, so has it happened very commonly? To get the endorsement of ECDC is not so easy, but I can tell you one thing. ECDC has set up its office in GIFT City. They are more eager to do factoring. As a matter of fact, ECDC will be coming with their own factoring company also very soon. Again, I can share that with you as well.
So I'm aware of it.
So things have changed now. So please talk to us. I'll request Naina to reach out to you, Vishalji, and let's try to help you on that.